we have three former presidents of OPEC, one of them several times, Abdulla, Al-Attiyah, of course, one acting minister, the acting Secretary General, and a former OPEC employee. That's right. But don't worry, this session is not only about OPEC. Your Excellencies, ladies and gentlemen, dear colleagues, good morning. The last four sessions or editions of this conference have all focused on the fundamental changes experienced by our industry and the associated risk and uncertainty which have affected and continue to affect our business plans. In 2010, we devoted a full session to the so-called game-changing events which have crept upon us since the turn of the century. In 2011, the overall theme was risk and the new energy map. Last year, some of you may remember, the focus was on energy strategies in turbulent times. And this year's theme, A Revolution in Progress, continues that pattern. We live indeed in a world of perpetual change in which new events, new developments, new crises, we heard this morning tectonic shifts, have become a new normality. The frequency with which these game-changing developments succeed and even overlap each other is staggering. As we look back at these alleged game-changing events, some raise doubts about the adequacy and/or the stability of future oil supplies to meet projected demand, and thus tend to encourage expectations of rising oil prices. But other events work in the opposite direction. They suggest that our industry is perfectly capable of developing new technologies and adapting to changing circumstances while still providing the supply needed to balance the growing demand. These latter events should, on the contrary, encourage expectations of more moderate oil prices. Clearly, we have a mixture of threatening new events and reassuring new developments. And the question is which one will prevail and which will tend to have more influence on expectations and therefore on oil prices. We have an excellent opportunity this morning to hear the views on this question and other relevant issues from a panel of respected figures who will no doubt bring a different perspective to our discussion. They are all well-known personalities and need no formal introduction. I will nevertheless say a few words on each of them in the order they appear on the program. His Excellency Abdullah Al-Attiyah, the President of the Administrative Control and Transparency Authority of Qatar, a strong supporter of oil and money, who masterminded the impressive Qatar LNG expansion, and who is now turning his talent to the even greater challenge of improving transparency. His Excellency Abdullah Salem El-Badri, the long-standing Secretary General of OPEC, a frequent speaker at this conference, an accomplished oil man who, he probably doesn't want me to say this, he's so good at his job that OPEC is having a hard time to appoint someone to fill his shoes. His Excellency Yousfi, the Algerian Minister of Energy and Mines, a longtime civil servant, a man of huge experience, in my view, one of Algeria's most trusted and respected oil professionals, who is known for his tireless defense of his country's interest. And finally, Dr. Fatih Birol, the chief economist of the IEA, representing here the executive director who fortunately could not be with us today. Fatih is one of the leading energy economists, an effective advocate of energy efficiency and renewable growth, and who, in contrast, I must say, to the others on this panel, believes that current oil prices are too high. Or maybe because he left OPEC. Your Excellencies, good morning again, and welcome to the debate. What I propose to do first is to lead the discussion by raising a few questions to which I would ask you to respond as briefly as possible, and then to open the debate for questions from the floor. And to begin with, I thought we could start with a question related to the overall theme of this conference, a revolution in progress. Among the many fundamental changes that the global oil and gas industry has witnessed in recent years, some may be seen as game changers that are impacting one way or the other on world energy balances, the security of supply, and the geopolitics of oil and gas trade. In your opinion, which major changes have most affected the industry in your country or in your organization? Which changes have proven to be the most challenging to deal with? Who wants to lead? This is more a question for the countries rather than for the OPEC and the IEA, although comments would be welcome. Abdalla, Faddal.
Thank you, Hussein. You ask us to say it in very brief, in a complicated, subject. So, we need hours to talk about what's happening in revolutionary of what they call it, raw gas or shale gas, and vis-a-vis the conventional gas. I've been in this, business for the last 40 years, tackling the issues in how to see. In the beginning, we were concentrated only in oil. In Qatar in 1971, my good friend Shell discovered the North Field. But for them, it was a big disappointment. It's gas, not oil. So it was shock even to my government, because it was huge hydrocarbon field, but it's not oil. So what they should do with gas, they say, leave it. So Shell pull out, take it back to the government and say, take your, this field, we don't want it. No, it's useless. So the North Field, as the largest single non-associated gas field in the world, with more than 900 TCF of proven reserve, was being, take out of our hydrocarbon map for almost 20 years.
That's right. Very good.
When I became a minister in 1992, we were zero production of LNG. So then the challenge in how you utilize this gas for me. It was a big challenge because at the time, you know, the oil price was go down and the economic, you know, recession was all over the world. How to convince the classical, you know, LNG producer. You remember the consumers of LNG were a very limited countries. I call them the, you know, the elite club. So I have to go to travel to Japan to convince the Japanese, Koreans, and others that to buy LNG from Qatar. The question, oh, Qatar is far away. Qatar, you know, how we can trust the sustainability. But finally, we succeed to sign the first contract with Chubu Electric.
Okay.
And always, when I saw Chubu authorities and management, I always joking with them. I said, oh, you are my first lover. Because first lover, you never forget it. But in the way now, is, you know, the map is changed because we succeed, Qatar, you know, to produce our original plan, I remember, to produce 20 million tons of LNG. This is our own ambitions. But we end up with 77 million tons. And it was a big achievement to be the biggest LNG supplier in the world.
Certainly.
And then we turned to GTL. It was revolutionary.
Yeah.
And when I was convinced by GTL, I found a lot of challenge even among my staff, saying to me, you are making a big mistake. You will take us to, you know, high risk. How you trust a technology that's never been approved? But I was convinced that I should not put all my eggs in one basket. Yeah. Yeah. Why all LNG? We have to have a mix. Because also, I was concerned about our depletion oil in the future. We have to substitute it in products. So we introduced the first project with Cecil. This is, you see, the general manager of Oryx GTL, Mr. Swedi. I'm very proud of to be okay. A Qatari become now the director manager or managing director. And then it comes the biggest project with Shell.
Abdullah, we'll come back later on to talk about gas.
Okay, now we are talking about what? Shale gas against conventional gas?
That's right. We're coming to that. We're coming to that.
I have a theory. You know, there are some, they are very concerned. Some of producers of conventional gas, they are very concerned about shale gas. They believe that shale gas may destroy their market, may destroy their long-term index to oil. But I have, you know, after a lot of things, I have another theory. I said shale gas is an added value to the gas.
Is what?
Added value to the gas. Because yes. I believe a few years ago, they're all concerned about the depletion of gas, and gas is not enough to the market, and the others looking for renewable, looking for new substituting. I believe, you know, this is my own belief, and I hope I'm right, and I always right, that the shale gas will give more trust to the gas producers, that there will be a long term of supply, more than 200, 300 years. Yeah. So it will be a very competitive against another, fuels. So as you say that United States now substituting, because before more than 50% or 60% of power generation in the United States came from coal. Yeah, okay. It's a very funny, interesting now to see USA export coal to Germany. And this is to show you how now the American reduce their coal consumptions, and they export their coal. And gas will be playing a big role. As you mentioned before, shale gas will go where? To power, or as Mr. Foster said, to power, to chemicals, to fertilizers, to to many aspects, that they need. Also, I have to, saying, what is the biggest market today in gas? Middle East. Middle East is facing a big shortage of gas. If you see Saudi Arabia, if you see Kuwait, if you can see Bahrain, United Arab Emirates, now today United Arab Emirates building the first LNG terminal in Fujairah. And Oman, and even other Jordan, and many, Lebanon and other, there are a big shortage of gas. And I think it will be, we had a calculation that even Kuwait itself, I think they calculate that they need, if they go to already they import LNG, but they believe they need 7 million tons a year to or less than mine, to cover their needs for the power sectors. So I'm not concerned about the shale gas. I can see that how they can play both of them the same role.
Yeah. Well, thank you, Abdullah. So if I understand properly, for you the big changes was LNG, and GTL.
Yeah.
That's right. And maybe we should listen to the views of the other country represented here. Youcef, do you have anything to say on this specific question? And please remain with the context of this question. There will be other issues we would like to touch upon later on.
The main changes during these last 10 years, there are two main elements. The first one, of course, is the economy. But the second one, which is my view, is most important, is the technology improvements. Improvement in the demand side of the energy efficiency and the energy conservation. We see that many countries are reducing their consumption. Many members of the ECD are decreasing their oil consumption.
Sure.
This factor is important because of the technology. But the most impressive one is on the upstream, on the exploration and production. In exploration, there are a lot of improvements. There are a lot of improvements concerning the deep water exploration, the pre-salt horizons, new areas like in Africa, in other regions, and in the production also. And the most, of course, significant one is the exploitation of the tight and shale oil and gas. Okay. In my view, this is the main important elements which have changed the scene during these last 10 years. Thank you.
Okay. Thank you, Youcef. Abdullah, Al-Badri, do you want to add something to this first question? What are some of the changes that made your work so difficult, the last, say, 5 or 10 years? And Fatih, if you want to say something later on, otherwise we can deal.
I said
very quickly, yeah.
Now the oil industry is always facing a lot of challenges. Now we are facing the challenge of the economic growth. It's really a challenge, especially after 2008 collapse. Now some countries they were able to move. Some of countries they're still there, and a rising cost. A rising cost is now going up very rapidly, and it is really a challenge for the oil industry, and also the marginal cost. And we talk about the marginal cost when we talk about something else. And of course, tight oil, but we will come to this later. It is also an energy policy. We see energy policies almost from consumers every day, every year, all of them driving at less consumption, but we really don't object about the new policies to protect their interests, but should be predictable. We really should know exactly where we are heading. And of course, the technology. Technology now there is, we heard it last night, we heard it today. Technology is improving the operation. Technology is adding a lot of advancement in the industry, and also may, when we still in its first stages, gas transportation. So the oil industry, it's always from the day one is facing a lot of challenges, a lot of obstacles. So And that's why we have the best in the oil industry. We have the best technician, we have the best expert, we have the best managers, we have the best decision makers. So, but with all these challenges, industry will overcome any obstacle in the future. Thank you.
May I
Say,
also,
Abdullah.
Mr. Chairman, you ask how to characterize this energy revolution. So I would say the following. I mean, when we look at the last couple of years, what we see is the script of the main energy actors in the energy scene are rewritten. Major energy importers are becoming energy exporters. Major energy exporters becoming major energy consumers, such as in Middle East. And small energy consumers are becoming key energy consumers, such as the countries in Southeast Asia. So therefore, the script of the actors are rewritten, and I would say there are three drivers for that. One is, of course, as we discussed, the shale gas revolution in the United States, that I think we should discuss a bit the implication of that. And it is not taken for granted that it will lead to increase of gas consumption as far as the gas prices stay at these levels. Second, the light tight oil revolution, which I believe is a bit different than the shale gas revolution in terms of resource base and the economics of that. And the third one, which is, I think, very important to discuss perhaps in the next minutes to come, is the energy efficiency policies of consuming and exporting countries. Yeah. I think these three policies, these three changes, made the new script dictated to the energy actors in this revolution, as you described, Mr. Chairman.
Thank you. Well, one of the game changers that have been highlighted in our past meetings is the emergence of oil as a financial investment asset and the growing influence of purely financial investors on the process of price formation. I had expected Abdullah Al-Badri to put this as one of the primary concerns. You mean that you are, or OPEC is less or no longer concerned with the effect of speculation on pricing?
When you talk about speculation, when we look at 2008, speculation went out of control. You know, it drove the price to $147, $150. Yes, there is some speculation now, but it's less volatility as we see it in 4 or 5 years ago. And as you know, we compare our notes with the IEA. We have 2 workshops last year before and this year to discuss this problem, the financial market interaction with the physical market. So I don't see it is still there, but it is not an obstacle as we see it a few years ago.
Okay. Well, let's move to a question on the health of the world economy. One of the disruptive changes that challenged the industry in recent years has been the global economic recession. We have observed how difficult it has been for many countries to recover, and among the industrialized countries, as you know, none of them has yet recovered completely. Moreover, it has become apparent this year that some of the fastest growing emerging economies, such as China, India, Brazil, are experiencing an acceleration. Some analysts believe or argue that due to changing circumstances, long-term global economic growth will simply not return on a consistent basis to pre-recession annual average rate of 3% in real terms. Do you share this view of a permanent slowdown in the world economic growth? Who wants to deal with that? Youcef, تفضل.
Thank you very much. what you are saying is maybe not true, but maybe, but in OECD countries, definitely the future demand will not come from the, I mean, significantly from the OECD countries, but from the non-OECD countries. And not only from China, India, but many countries are developing very fast. And I think for the medium and long term, definitely the oil demand will increase.
Okay.
Definitely.
Thank you.
And the problem is, of course, on the upstream side, if we are going to make some significant new discoveries and to improve the recovery from the existing and mature fields. Thank you.
Abdullah, you want to say something on this?
You know, I think, it's a very complicated because,
Not the words, not the words. 2
we have,
minutes.
Abdullah. Yeah, I'm younger than him, so I was younger than you. I always try to fix my age, so as oil price, sometimes, and how the demand. But I'm now, when we talk, concentrated in shale gas, conventional gas, and then, for sure, Ait-Laoussine, you bring us back to oil. And then we will talk about, but in generally, how we can see the demand and supply in energy consumption. I know that I agree with Dr. Yousfi. We will not going to see any demand from the OECD. It's they believe they reach their efficiency. What we are seeing, today, and especially, my favorite topic is gas, because Qatar is a small oil producer, but the good news is our gas. So we become, I can see the gas map consumptions coming very heavily from Middle East and Asia. And we can see today, Bangladesh, Pakistan, they will join me to the LNG market soon. We signed a contract with Thailand just last year for almost 2 million tons to a long-term contract to Thailand. This is the first time Thailand receive LNG. Singapore start, to receive LNG. So today we can see the demand, and even when I come to you to Middle East, we can see the map of the gas consumption will be so huge, even they cannot commit with all the requests. But I can believe that the world, we seeing a lot of change in the energy sector. I agree with my good friend, but yes, he changed his gun. He was OPEC gun, and now he's OIA gun. So sometimes, it's very difficult how to defend when you are here and here.
Now he has no gun.
And now he has no gun. Both you have no guns. So I agree that, we see a lot of change. Oil exporter become oil importer. We can see newcomers. As now today, what we are going to see in Uganda, Ghana, Mozambique, and other, they are newcomers, coming, to. So yes, we can see a lot of change. Now, even, this is very important, I say, no one is talk about it, focusing the shortage of products, not the crude, not the gas. Now we can see is a big shortage of gasoline refinery. We can see that oil producers now, big oil producers, are import gasoline, diesel, and other products. And this is what I'm saying, that shale gas and conventional gas will be one of the solution and substituting of expanding the refinery is GTL. So you could produce more GTL, substituting the shortage of refinery, because today no one wanted to go in a refinery, in a green, or in green-based, projects. So I believe also GTL will be one of the solution of compensated the shortage of products.
Abdullah, I think I made a mistake. I wanted the other Abdullah to talk.
Okay.
So I have to be careful from now on when I say Abdullah, okay?
We have white hair, and people confuse us. But when we look at the last 25 years of the growth, it is about 3.2%. When you look at the growth before the subprime crisis or the financial crisis, it was 4.6. Now in OPEC, we see the growth in 2013 is 2.9, in 2014 is 3.5.
Yeah.
I don't think we will go back to 4.6 that we achieved before the subprime crisis. Now, let me tell you something that it's coming maybe last year and this year. The OECD is growing. The OECD is not really slowing anymore. The OECD is contributing. Yes, the main contributor are Asia, the developing world. It's India is about 6%. China is about 7.7%. They're still there, but now we have a contributor of developing world. Now, I think we will not reach the, I don't say we will not reach, but maybe we will not reach the 4.6, but I think we will reach 3.5%.
Okay, thank you. I think, Fatih, you want to say something about this? Please just clarify one thing. In your medium-term report, which was published recently, I think you're using an economic growth assumption of something like 1.3% in the period, 4.3% in the period 2012 to 18. But what is most astonishing is that you are really looking at a growth, global growth of oil demand of 1.3 MMBD average per year. Even including a decline in OECD global demand. Don't you think this is a little bit high compared to the less than 1 million we've had in recent years?
So I think, first of all, the global economy, as you asked, Mr. Chairman, there is a moderate recovery in the OECD region. US is, despite some headwinds, US is recovering. In Eurozone, we are out of the recession. Japan is rebounding. These are moderate recovery there. And in terms of BRICS, we see a slowdown. And this is very important because they are the engine of the global economic growth. When you look at the last 10 years, more than 60% of the global economic growth came from the BRICS. So when they slow down, this will have implications. However, as you said, in the last 10 years, the global oil demand increased about 1 million barrels per day, and we expect this to continue more or less in the next 7-8 years. But we have to be ready. Oil producers need to be ready to see an oil demand growth around 2020 a bit lower than what we used to see, about perhaps 500,000 barrels per day, and they are, among other things, driven by the efficiency improvements in the transportation sector. When we look at the United States, and we talk about the US independence and so on, many speakers mentioned today, the independence story in the United States is not only determined by the increase in the light tight oil, but also decrease in the domestic oil consumption in the last few years, mainly driven by the car fuel efficiency. And this will happen in China as well. China is setting very strict efficiency standards. So therefore, perhaps a few more years, we may see 1 million barrels per day, but after that, a bit slowed down. One more point, Mr. Chairman. From the oil producers' point of view, how much we are going to invest, how much we have to increase the production, to look at the demand growth only will be wrong. Will be wrong. It is only 1/3 of the issue. The other 2/3 is the decline in the mature fields. Peter Fosa in the morning referred to our work. What we see is that between now and 2030, about 40 million barrels per day of conventional oil will decline. So what the oil industry have to do is to compensate that decline, 40 million barrels per day, and on top of that, meet the growth in the global demand. So therefore, we will need Middle East oil. Yeah. When I talk about the changes in the revolution, perhaps I forgot to say one thing which will not change, which I believe is the Middle East is and will remain to be the heart of global oil industry for many years to come. So I wanted to underline that as well.
Thank you. Yeah, شوية عبد الله ما تطولش ها.
About forecasters. You know. With my experience, my advice, don't believe in forecasters.
All right.
For the last many years, we forecast a lot of things, you know. A few years ago, we forecast that America will face a big shortage of gas. And the forecaster approved to us. They came and put a lot of presentation. So we built a big terminal in Texas. And even we just not finish it even. The whole story of gas changed in America. So from that time, I said, don't believe in forecaster. Thank you.
Well, I think we all know here that you are not in love with forecast, Abdullah, because that's exactly what you said.
Yeah,
last
because
year.
I never saw it, it's only an indication,
Yeah.
So.
Okay, well, with such a panel, I think we have to have a question on OPEC. Fatih, you listen too, because, we want your reaction, all right? Many observers of the oil industry have concluded that things are moving badly for OPEC, by which they mean that moderate global oil demand growth combined with accelerated expansion of production in non-OPEC countries leaves OPEC facing a shrinking market share and even an absolute decline in the call on OPEC crude oil. Indeed, both OPEC and the IEA project in their base case scenarios the call on OPEC crude oil to remain below 30 million barrels per day, at least for the next 3 years. Will this prove to be a serious challenge for the organization and or some of its individual members? What, if any, impact do you expect this will have on prices? You may have guessed, Abdullah Al-Badri, this is a question for you.
Yes.
Okay.
I have been asked this question almost every day. So your question is not as strange to me, Ait-Laoussine. But really, as a matter of fact, we should look at this tight oil as a new liquid, and we should welcome it. We should add to the world supply, but there is nothing called independent in the oil industry. I hear it many times, there is nothing called it. Those people who call independent in the States, they don't know the oil industry. This is number one. Number two, when you look at the demand side, we see it, this year, for the remainder of this year, we see that demand will increase by 0.8 million barrels a day. Next year will be about 1.1 million barrels a day. And in 2014, the demand will increase by 1 million, and in 2014 will be 1.2 million barrels a day. So this all in all will end up in non-OPEC supply. Now, for non-OPEC supply, the call on OPEC for this quarter is about 30.7 barrels a day. Now, and in 2014, 2015, 2016, 2017 will be about 30 million barrels a day, more or less. Now, when you look at tight oil, it is there, as I said, but the production now it is about 2.5. It will be 3 million. It will be 4 million. Maybe will reach 5 million. I don't think, to me, with this quantity, that OPEC in trouble. No, sir. I think OPEC will keep producing its quantity. And however, tight oil, the marginal cost of the tight oil is just too much. You know, it's about 90. The decline rate is 60%. We were looking in the, yes, there will be tight oil, but will be peaked in 2018. And then it will decline. Yes, we will have a 5 million barrel a day spare capacity in 2014 to 2015, but this is because of the heavy investment of our member country in the past. So we need this quantity as this tight oil will decline from 2018 down. Maybe it will go to 3, maybe it will go to 2, maybe it will go. And let me tell you one thing. This tight oil is hanging on the cost. If the cost will drop to $60 or $70, it will be out of the market completely. So OPEC, we are investing. OPEC, we are keeping our commitment. OPEC, we will do whatever we can do to supply the market with enough oil, and also some of us supply gas. So I don't want to listen to, because I'm listening to a lot of reports. Some reports, they say that OPEC will be, there will be no cohesion of OPEC. Some of them, that's OPEC will, everybody will go. That this tight oil will ending up in adding another failure states. And if adding another failure states, that there will be a problem, a collapse, and it is good idea for the international organization to go and change their contract in OPEC member countries. This is something that's really not professional. Gas, tight oil will not affect OPEC at all. It is a new supply. We welcome it, and it will be there. But nothing as status quo independent, nothing, because you buy oil, you sell oil, you exchange oil, so there's no way. Thank you.
Yeah, very briefly, Youcef, because we're going to have to give a chance to the floor to ask some questions.
We don't forget the long-term view. OPEC has demonstrated in the past a very strong resilience, even in difficult situations. There is one thing we cannot forget, is 75% of the reserves are within OPEC member countries. And these two factors, see that I don't believe that there is some difficulties for OPEC in the future. Concerning the prices, you know that OPEC is not the only actor. There is quite a consensus concerning the level of the price. Thank you.
Fatih, just 10 seconds.
So the 5 seconds is just, I want to say that I agree with Mr. Secretary General. I do not think that this is a life-threatening development, what is happening in the United States. It is the reason why I said we will need Middle East oil. Perhaps there may be a transition period in the next few years, but around 2020, we will need Middle East oil, and it is the reason I said it is the heart of the global oil supply for the next years to come. Next 5 seconds. Having said that, I also don't think that OPEC has very difficult times, Mr. Secretary General. When you look at the last 5 years, 2007.
He said it, not me.
Now, 2007 to 2013, in the last 5 years, 6 years, OPEC oil production increased about 1.3 million barrels per day, it's about 4%. And OPEC revenues increased in the same time period from 800 billion to 1.2 trillion US dollars. Mashallah, I would say. It is about a 45% increase in the revenues, vis-à-vis 4% increase in the production. So it will be very difficult to say that OPEC is facing challenges for the time being.
Thank you, Fatih. Before we move...
Not 50% high.
Before we move to questions from the floor, there was one question that I wanted to ask Abdullah, but please be very short.
Okay.
How do you like your new posting in charge of transparency? Have you made any progress so far?
I think,
what is it exactly?
Yeah, I think, I'm a big believer that, especially even in the energy sector, for a long time, it needs a lot of transparency. I think the challenge, not even in Qatar, but even in the whole world, how to challenge, the transparent, especially in the energy sector. I mean, if you can see what now today, the law approved in the United States, now in the European Union, and how, by 2012, and how to see that. I think corruption is the biggest enemy to the world. We can see a very rich countries that being fallen down because of corruptions. We can see how to eliminate politicians and others who influence in this, corruptions. Corruption is a matter of challenge, where the world should stand against corruption. And I'm talking in generally, that the world should be, handling these problems. We can see corruption is spread all over the world. We can see the corruptions damaging many countries. But how you can see it, how can you adopt it, this is the main questions.
Well, I'm very sorry. I had really thought that I would give you a chance to ask questions. I leave it up to the organizing committee now. Shall I ask any questions from the floor? Yes. Or shall we go straight? Yeah.
Perhaps one question would continue the conversation in the coffee break.
We can go ahead then.
One question.
Only one.
During the coffee break.
All right. Who is the lucky winner? There. Majid? No. Can somebody take the microphone there, please? We already lost 30 seconds.
The opportunity to ask one question. It's Robert Kessler from Tudor Pickering Holt and Company. I was interested about the view of the panelists as it relates to the refined product markets. I think if I heard correctly, I heard His Excellency Mr. Al-Attiyah speak to the potential shortage of refined products and about gas to liquids as one potential solution to that shortage. I think, meanwhile, the IEA has a view that refinery capacity expansion is likely to be well in excess of demand growth over the next few years. So I'm interested if the panelists might be interested to compare and contrast those two views.
Thank you very much. I'm not, as we say that the European Union is a different place, different market. Maybe they can see decline in consumption of products. But what I can see that many countries, even in the Middle East, and they are start, big consumptions. Now, if you see the Middle East, especially now we have a big shortage of diesel and gasoline, especially in the seasonal time. So, you have to, I'm concentrating on a different market than European, I never mentioned European that it will be a big shortage of, products. But I can see, in Middle East and other parts of the world that, the demand, is very, very heavy, in fuel, gasoline, and diesel. And I saw a big oil producers. They are importing a huge quantity of products. And sometimes they are facing a very difficult in how to provide enough, products, for the high season for them.
Thank you. Well, I hope you have enjoyed the session in spite of the fact that we didn't have time, to let you ask questions. And with that, I will ask you to show your appreciation, with a big applause.